I'm Nathan Burrell, Managing Director of Randolph Main Capital Group and the Fraxion Token. We're here at the exclusive Bath Club in Miami Beach, Florida. Imagine having access to institutional-grade real estate investing. Imagine Fraxion. We're here with our development partner, Donahue Peebles, to discuss how Fraxion levels the playing field in real estate investing.
Hey, Don. Good to see you again. Thanks for taking the time to sit down and speak with me today.
Great to see you as well. It's been a long time, and we've known each other for so many years. It's always good to see you, and of course, I'm a big admirer of all you've done.
Appreciate that, Don. Appreciate that. Well, it's an exciting time for Randolph Main Capital Group as we just launched our first security token offering. It's called Fraxion, Fraxion. And as you know, we're going to be investing the proceeds from that offering into your development projects. So for my investors who don't really know much about you, I'd like them to get to know you a little bit better here today. You know, a lot of people ask me, how does a guy like Don Peebles go from almost no money to $1 billion or more net worth all by himself pretty much? How did you do it?
Well, nobody does it by themselves, and I certainly didn't do it by myself. So many people helped me along the way. And it starts off, of course, with my family and my mother. I credit my mother, who was married at 16, had me at 19 years old, worked as a secretary, and then got exposed to real estate and decided to get a real estate sales license. And when we relocated to Detroit from Washington, D.C. And then within 2 years, I think I was 8 years old at the time, within 2 years, she had started her own brokerage company in Detroit. And I watched her build that business. And then we moved back to Washington, D.C. in 1973 when I was 13. And she worked in real estate there as well. And I saw her ups and downs in the real estate industry. One of the things I didn't know and was very familiar with is that from the time I can remember, real estate provided income and resources for my mother and I. My mother was the breadwinner in our family, and so I learned a lot from her. And then she made it a point that when DC got the right to elect its own government in 1974, as a 14-year-old, she had me volunteer for a city council candidate who ultimately became mayor of the city. She had me work on Capitol Hill as a page and an intern my last 2 years of high school, so I got a chance to see national government and politics up close. And so then I was going to be a doctor to emulate my uncle, and who was a doctor in New Jersey. I went to Rutgers, and after my first year, I made a decision that medicine wasn't for me. I went back to DC and I started working in the real estate business. And the person that I had volunteered for as a city council member had become mayor in 1978 when I went off to college. When I came back, he was mayor of the city. And then by the time he was running for re-election in 1982, I got involved in his campaign, and ultimately he appointed me to a property tax appeal board. The second year I was on it, he made me chairman. So at 24 years old, I was one of the most powerful people in commercial real estate in Washington, D.C. And then 2 years later, he signed a lease, pre-leasing all the office space in a building that I proposed building in Southeast DC, which I built and delivered in 1989. That was my first building. I still own it today. It made me a multimillionaire, and it got me started in real estate. And if it wasn't for him, I wouldn't be here today. His name was Marion Barry. And so he had a checkered political history, but he was a transformer. And I happened to be in DC when he was mayor and got my opportunity thanks to him. And then from there, I started continuing to build up my business and our company. And then we started expanding nationally in 1997. And now the business has grown to a business that has about $10 billion of active and completed development projects around the country. But it was the opportunities, the exposure I got from my mother, the lessons I learned on Capitol Hill, working for several members of the Congressional Black Caucus, and then getting the opportunity from Mayor Barry. And those things transformed my life and put me in a position to where I had some resources, both intellectual and knowledge and relationship resources, and some business resources and economic resources to go out and really compete.
Beautiful, beautiful. Very inspiring story. I know it inspired me when I first learned of who you were all those years ago. Most of your projects are built on public-private partnerships. Can you talk a little bit about that type of deal structure and how it benefits you and how it might be put you at more of an advantage versus the traditional development?
Well, I think that, so public-private partnerships require a different level of expertise. And what I mean by public-private partnerships are acquiring land from the public sector, either a city, state, or federal government agency. And government agencies, when they sell land, they're not land speculators. They're normally trying to effectuate an outcome, create jobs, create economic development, expand the tax base, provide housing, so many different things. And so they're focused on the outcome. So you can acquire property, development sites in supply-constrained markets where land is very tight and hard to come by. And you can acquire it from the government, and price is not going to be the sole determining factor. And so therefore you can get a better buy on the land. And then also the government's going to be there to support you step by step to get you through the development process. And then you don't have to acquire the land or close on it until you're ready to commence construction. So what that does is it eliminates the risk of holding land. Because one of the biggest challenges in development is buying land and then making the sprint to get it ready for construction and development. And a lot can happen during that 12 to 24 month period. And if the market changes and so forth, then a developer is stuck with the land, having to carry it with no income coming in. And that's when people lose their properties to foreclosure and the like at the commercial development level. And so the public-private transactions eliminate that risk because you only acquire the land when you're ready to commence construction. So therefore, you don't have that risk, nor do you have the cost of carrying the land, paying property taxes, paying interest on your loan, insurance, and all the other things that have to go with carrying the land. So those costs are eliminated and that risk is eliminated. And so therefore, you are able to mitigate two of the biggest risk factors in the development space. And then one of the other things you get is that unlike a commercial partner where if a private sector person is your counterparty, I'm buying land from you, I buy your land, and then I come back 6 months later and say, hey, the market's changed, can you help me out? You're gonna laugh at me. But in the government, we don't own the land yet. They're looking for an outcome or outcomes. And so, hey, the market changed and I can't give you those outcomes. And they will then work with you to provide financial incentives and other things to induce you to proceed with the development. And so, again, another risk factor eliminated as well. And so that is why I like that space. And I think we are one of the most dominant firms in that space. We do as many of them as any other company. And in pound for pound, we're doing more than anybody else as well. And we like it because it's well suited for our skill set. Because my political background, starting when I was 14 years old, I understand how to work with communities. I understand how to work with government leaders. And that's a culture in our company. We all understand how to give the community opportunities in our projects. And that's one of the other aspects that we've been able to do well with, is that we are making sure that the economic benefits derived from our projects are provided to those people who are living in the communities that we're building. And so that makes us more attractive as well. But that's kind of the secret sauce of our core business.
Love it, love it. Now, you're a very outspoken proponent of diversity and assisting women and minorities with access to capital to possibly be the next Donahue Peebles down the road. You've trademarked the term affirmative development. What does that mean?
Well, my wife came up with the name in a brainstorming session with our marketing team. And because she's always taken the view that affirmative action is a positive thing and should be continued. And if you may recall, in the 1980s, during Reagan's era, they started assaulting affirmative action and dismantling it. And affirmative development is meaning that we're going to take affirmative, aggressive steps to make sure that the economic opportunities generated by our development projects go to people reflective of the population demographics within the communities that we're doing business with. I mean, if you look at capital, there is now about $84 trillion invested in venture capital and private equity. $84 trillion. Biden spent $2.5 to $3 trillion to save the country from COVID. And here you got $84 trillion invested in venture capital and private equity. Out of that $84 trillion, less than 1.3% of it is invested in firms run or owned by women or people of color combined. So that means that 98.7% of all venture capital and private equity money goes to white men. So that perpetuates this disparity. And so there's systemic discrimination in this country when it comes to the deployment of capital. And so I'm an outspoken critic of it because, one, I'm a victim of it because it's harder for me to raise capital. But I know the only reason why there are not hundreds of thousands of people like me is that we don't get access to capital. And until we change that, we're going to continue to have challenges of financing businesses and growing wealth. And so the wealth disparity in this country is so wide, and Black Americans carry a disproportionate burden of poverty as a result of it. And so I'm an outspoken critic of that because it's such an unfair system. And it would be like me saying to you that, hey, we're going to have the Indianapolis 500, and we got driver number one. Driver number one starts off on lap 450. Driver number two starts off on lap 1. They both have Ferraris. They both are very talented drivers of equal skill set. And then they say, let the best driver win. Well, the only way driver 2 can win is if driver 1 crashes and burns. That's not a fair system. So we either got to move driver 2 up to lap 450, or we got to move everybody back to lap 1 and we got to all start again. So I don't think our country's going to move everybody back. So we got to move people forward, and that's what affirmative development is all about.
Don, I got to tell you, when I read about it, it stuck with me. My firm is of the same mindset in that we're trying to also assist women and minorities with access to capital, and we're doing it on a different platform, and we hope we're successful with that. But it's clear that it's not as much about the money with you anymore, and you want to affect change, and I see you doing that, and hats off to you for that. And anything that we can do at Randolph Main to assist you in that, obviously we want to do that. You've got projects, you talked about the $10 billion, you've got projects in Miami, DC. We're sitting in one of those properties here in Miami at the world-renowned Bath Club. Right down the street is the Royal Palm, which made headlines for you down here in Miami. And you seem to be very, very diversified. And I want our investors to understand that, we're not putting all of their money into a single project, that you're across residential, commercial, hospitality, retail, and mixed use. But in your opinion, right now in today's market, is there a real sweet spot that you're focused on?
Well, I think, first of all, I've built my business on geographic and product type diversification. I started off just in Washington, D.C., building an office building in Washington, D.C. So imagine if I stayed in Washington, D.C., and I kept focusing on office buildings. And the biggest tenant in Washington, D.C. is the federal government, and they haven't come back to work yet for COVID. They're working remotely. Washington, D.C.'s office vacancy rate is almost 50%. And so I would be broke. My company would be down the tubes, no way of coming back. But we're in 8 different cities around the country. And we do hotels, we do residential, multifamily, condos, we do retail, we do, hospitality. So we are in office in the right markets. And so that means that you can think about our business as like layers of Swiss cheese. The holes will never line up all the way through because you've got all these layers of Swiss cheese. And if you layer up Swiss cheese, then you can't get all the way through. And that's what so basically we feel that we have a business that can endure, perpetually because we mitigate concentration in exposure and product type. So office space is not dead everywhere. It's prospering here in Miami and Miami Beach. Hotels aren't dead everywhere. They've recovered in Los Angeles, they've recovered in New York City, and they've recovered in Miami and many other places. The type of hospitality industry customer has changed from a corporate and group market to heavily leisure, and that will continue. So things change, and if you have different product types and you have an expertise in those, then you can weather the storms, because unless there's a global crisis, then one sector, some markets are going to do well, right? All of them are going down.
So let's talk about that. Right now, the last year has been really tough in business in general, but with respect to real estate, the housing market's taking it on the chin. You got the Fed, raising rates at a ridiculous clip right now. I know, they kind of got behind the curve, and now they have to try to catch up, and it's kind of painful. But as far as here going forward, where do you see the biggest opportunities? I know as far as housing goes, the buyer market is tough, but what about the rental space?
Well, I think the housing market, buyers are still buying. There's not enough inventory. I mean, the thing about real estate, unlike stocks, unlike, other types of investments, real estate is a necessity. You can't sleep. I guess you can if you're homeless, unfortunately. But otherwise, if you need a place to sleep, it's got to be in a piece of real estate. If you want to open up a business, it generally needs to be in real estate. If you're going to take vacation, you need to have real estate and a hotel to stay in. So you have to put your body somewhere in certain times to do certain things. And so real estate endures. And so it's a question then of which markets and what product type we do. So housing, people still want to buy houses. And they are going to, they're going to, make the adjustment in terms of what they can afford to buy based on interest rates. When I started and grew my business, interest rates for commercial development were, 8 to 10 or 11%. So we were able to do business there. My first home mortgage was 9.87%. And I was happy to have it. And that was in 1989 at the epicenter of, prosperity in the go-go 80s. So the market will adjust to that. But rental projects people either will buy, and if they can't afford to buy, then they'll rent. But they're going to put their bodies somewhere. They have to rent something smaller. They have to rent something less expensive. So I'm very bullish on the rental market, except in cities and places where people are leaving. And where people are leaving, then you've got to be very careful. And I think people are leaving New York City. They are leaving Los Angeles. They're leaving San Francisco because of quality of life and tax issues. And therefore, we have to look at those markets with a bit more caution. They're coming to South Florida. They're coming to Charlotte, North Carolina. They're staying in Boston, and more people are coming because you've got these educational institutions bringing people there every year. So you look at those markets, and multifamily strong, for sale condos are strong, and single family homes are strong too. Because we still have a shortage of supply and inventory, because now what's happened is people who got these low interest rate mortgages for the last 8-10 years, they say, why am I selling? I got 2% interest rate on my loan. So they're not selling. They'd rather stay put, have their 2% interest rate, and be happy. So we think that the housing market is going to continue to be strong in the market where people want to be, or where there's supply constraint. And we're bullish on that. And we also feel good about, the hospitality sector. Office sector, with the exception of a couple markets, we're out of that space.
We spoke about leveling the playing field and making access to capital better for people of color and women. At Randolph Main, from a real estate investment standpoint, we feel the exact same way. And the average retail investor, non-institutional, that wants to invest in a Donahue Peebles-led project, are generally shut out because of the high minimum investment amounts required to participate. So our business model is to basically aggregate smaller amounts from a lot of people, so that as a single investor, Randolph Main Capital Group, we can invest in your projects. So, we see the blockchain as a very, very important tool in leveling that playing field, and we hope to do that in a big way, not just in real estate, but some other areas. But with respect to the opportunity, how do you feel about things becoming easier for the relatively smaller investor to get involved in projects such as yours?
Well, look, I think that what you're doing is transformative. And I've always been frustrated. I can think back in the 1980s, at least working professionals were able to invest in specific real estate deals and so on through real estate syndicators. But once the tax law changed in 1986, it ran them out of business. And as a result of that, even the working professionals who were higher income earners, they lost the opportunity to invest in real estate. And ultimately, the only way they can invest in real estate, in the 90s and going forward, were through real estate investment trusts. And there you are blindly investing in a broad, group of assets that continue to grow and expand and without an overall clear direction. But it still makes it a stock. So but you don't get to invest in the entrepreneurs that you like.
Right.
And I think that having the opportunity for small investors to actually generate some money, to make a profit, to make a good investment in real estate, is a tremendous opportunity, and it'll go towards helping begin to close the wealth gap, because some investors are going to do well, they're going to do another investment, they're going to do well, and then ultimately they'll grow their scale of investments, and maybe some people will end up creating their own businesses, but they'll get an early exposure to investing in developers and businesses that they want to invest in, and I think that's very, very important. And the reason why we're working with you and your firm is because it's all about affirmative development. We want to see more people, especially people of color, and lower income and moderate income investors who have been locked out of the opportunity to invest in large scale commercial real estate.
But Don, like I said, it's been a pleasure to see you again. I don't want to take up too much of your time, but at the end of the day, I want my investors to know where I'm putting their money to work. We've identified you. You were the first name to pop into my head when we decided to roll out a program like this, not because of my relationship with you, but because of who you are, what you've done, and what you stand for. So hats off to you. Wish you much success, and I speak for the entire Randolph Main family and all of our investors. We look forward to investing with you for a lot of years to come. Thank you again, and look forward to the future.
Same here. Appreciate it very much.